Hello and welcome to another video. The world of finance can be particularly confusing. Someone telling you this is the best investment and someone else saying buy this stock right now. Oftentimes you don't know what to do as you're being bombarded with so much information. And let me let you in on a little secret. The financial world doesn't want you to know either. This means that they can keep touting investments, you're confused, and then you keep paying them extremely high fees so that they can go around and driving their Lamborghinis. Now in this video, I'm going to describe to you the spectrum of investing. This will help you understand where you sit on this spectrum, where you should be doing it yourself or getting someone else to do it, and how much time you can invest into investing so you can be on a path to long-term wealth. So let's get going with the video. As always, before we get going with the video, please make sure you hit that like button and hit that subscribe button so you don't miss out on any further videos. So as a beginner, it can be overwhelming when you're getting into investing. You've got your money ready, but then the next stage is to choose where you want to invest, how you want to invest, who you want to invest with. It's all a lot of work. I appreciate I'm probably a little bit biased. However, I think it's completely worth it. But I appreciate there's many people in the world who don't have enough time to invest into investing, and other people who just aren't that interested, but know that putting money into the investment markets is a surefire way to long-term wealth. The way that everyone should look at investing is to look at it as a spectrum, from doing it yourself right the way to fully automating it. This depends on a lot of things. Depends on how much money you have, how comfortable you are at investing, how much risk you want to take, and how much time you want to invest into investing. So I'm going to use a piece of paper, some colored pens, a ruler, and my brilliant art skills to show you exactly how this spectrum works. When most people come to investing, they think they're going to have to be picking stocks and spend lots of time reading balance sheets, understanding exactly how a company works. Well, this side of investing is the DIY side. Just as an example, this is like choosing what you have to eat. And in this case, you're cooking the meal. Here you research a recipe, you decide how many people you're going to cook for, you go to the shops, you buy all the different goods, you do all the prep, and then you cook the meal. That's exactly the same as you would if you were to do it yourself in investing. You would do all the research, you would then allocate the amount of money that you want to spend on each individual stock. You would choose when you're going to buy a stock, when you're going to sell a stock, and how many different stocks you're going to own. Just as you would when you're cooking, you can sometimes overdo it. If you're cooking something, you leave it in the oven for too long, it gets burnt, and if you don't leave it in enough, then it doesn't get cooked. Same way with investing. You can leave an investment for too long, and it goes up and then back down, and sometimes you can't leave it in enough. You can sell too early, and then the stock goes and doubles, triples, or times 10. That's a risk that you're going to take when you do it all yourself. And next, at the other end of the spectrum, is when you have a fully automated portfolio. This, as opposed to cooking your own meal, this is just like going to a restaurant. Once you know what restaurant you want to eat at and once you've picked off the menu, then quite literally the food comes to you and you don't have to lift a finger. This is very similar to investing. You can automate investing, you can decide on what broker and what risk that you want to take, and once that's done, then it gets invested into a diversified portfolio so you don't even have to think about it again. This is a great way to invest if you just don't have the appetite or the time to invest into investing. Here, you can give your money to someone else and they will do it all for you. And hopefully at the end of a significant period of time, they'll have made you money. This is often a great way for beginners just to get into the stock market. Giving your money to someone else so that they can invest it for you whilst you keep an eye on it is a great learning curve so that you can understand how a professional would do it or an algorithm could do it, which means that you can understand how an investment works and how the price of investments can move over time. And as you get more comfortable, you can move along the spectrum of investing. And now finally, we have a mix of the two and what I like to call the ready meal option. This is where you still need to make some decisions, but the bulk of the work is already done. As with buying a ready meal, you know that the meal is pretty much prepped. However, you still need to make the decision about what you're going to eat and then also finally just shoving it in the microwave to cook. The same way the ready meal option does a bulk of the work for you, the investment world is exactly the same, and this is where you'll be investing into funds. Now, funds are a group of pre-selected companies which someone else has pulled together. This could be an index fund, which follows an index such as the FTSE 100 or the S&P 500, or you could have a fund which is put together by a specific manager. This could be in a certain sector or in a certain investment style. So instead of buying one company, you basically buy a basket of companies, which has already been put together for you. Funds are normally professionally managed, be this by an individual person or by a robot. However, whilst funds do a lot of the work, you still have to make certain decisions about what sectors you may want to invest in, what countries you want to invest in, what managers you want to invest your money for you, and also different styles of investing. Do you want income or do you want growth? You don't just have to buy one fund. A bit like buying a stock, you can hold multiple funds from different managers managed in different ways for whatever reasons and different styles you want to invest into. As you can imagine, there's a whole universe of funds. Individual stocks can be put into different funds many different ways. Just an example, the FTSE 100, which is the 100 biggest companies on the London Stock Exchange, can be split into many different ways. You could have one fund which just chooses the 10 largest companies in the FTSE 100. You could also have another fund which has the 10 smallest companies. You could have another fund which only holds the oil and gas sector in the FTSE 100. And as you can see, those 100 companies can be split into many different ways, creating many different funds just from one index. However, what the key advantage of funds is the fact that someone else is doing the work for you. Someone else is deciding exactly when to buy, when to sell. It is someone else's responsibility to keep you diversified and, most importantly, make you money. Now, I appreciate I've told you about the spectrum and you may be wondering exactly where you sit on the spectrum by now. However, you'll be looking at me and saying, that's cool, I know exactly where I sit, I just now need to know exactly how and where I need to invest. It's a bit like someone saying to you that you should go and eat Italian food, and they know a great restaurant, but not telling you where that restaurant is. So now I'm going to give you some ideas about who to use and which specialists are great in each of the areas. I appreciate that many of the largest brokers out there provide the whole spectrum of investments, right from the DIY option all the way to fully automated. However, going to a large broker is a bit like going to a supermarket. You can get pretty much all the goods that you want, however, it may not be the best place to get individual items. If you want fish or you want meat, it may be better to go to a fishmonger's or a butcher's rather than having the supermarket meat. This is exactly the same when choosing a specific broker or a specific platform to start investing. Here I'm going to highlight different providers at different ends of the spectrum. They're providers which I have used or still use and which I think are great value and specialists in each of their areas. So for the DIY option, two providers which I think are great are Hargreaves Lansdown and Trading 212. Hargreaves Lansdown is the biggest provider of stocks and shares in the UK. And this means that you can buy stocks from all over the world. You can drill into exactly what a company does, and it has loads of research on their website. However, one big downside of Hargreaves Lansdown is that you have to pay every time you trade. And this is where Trading 212 comes in. Trading 212 is a free trading platform and does virtually the same as Hargreaves Lansdown. It doesn't have the vast universe of stocks. However, it still has enough stocks and the biggest stocks so you can invest. And this is especially perfect if you want to get into investing and you're using small amounts of money and only maybe want to buy a couple of shares at a time. So both of them have their pros and cons. I think Hargreaves Lansdown is great for seasoned investors who are buying big chunks of money or investing into a pension or a lifetime ISA. However, Trading 212 is great for starting out and investing into an ISA. Hargreaves Lansdown and Trading 212 are two providers which you probably want to look into when you want to be buying individual stocks. I'll put links down below to Hargreaves Lansdown and Trading 212 so you can understand exactly how each of these platforms work. Let's go into the other end of the spectrum with a fully automated investment strategy. This is where providers such as Vanguard, the biggest provider of index funds, are perfect. However, there are also other providers, and one which I particularly like is called Nutmeg. Both of these providers use index funds. You can buy a whole basket of investments that track the likes of the FTSE 100 or the S&P 500 just by putting a few pounds into a Vanguard ISA. They also provide managed funds, which essentially means that you're buying a whole basket of these index funds. There is also Nutmeg. Nutmeg also do the same thing, however they're called a robo-advisor. This because they are low cost advisors who will pick a selection of exchange traded funds for you to invest, so you have a diversified portfolio. A robo-advisor is essentially like a normal advisor. However, instead of having a person and a team of people to advise you on what you need to invest in, it's essentially an algorithm that just does it for you. This keeps the costs down and means that you will have a diversified portfolio just from a click of a button. Both Vanguard and Nutmeg mean that you can invest your money at a certain level of risk where you feel comfortable, and then each and every month you deposit a certain amount of money, which then just gets invested into a diversified portfolio, meaning that you never have to worry about where your money is then going. You just have to remember to deposit your money each and every month. This is so important, just to spend time in the market and understand a little bit more about what you're investing into. Now for me, starting with the likes of Vanguard and Nutmeg is perfect for beginner investors. However, there is also the hybrid option, which is where you invest into funds. Now the hybrid option is the ready meal option, which I was talking about earlier. The ready meal option is the biggest area in the financial world. This is because there's so many funds to choose from and so many different providers. And this is where the likes of the DIY providers and the automated providers meet. If you're looking for a ready-made investment, then Vanguard and index funds is the best way to go. They are the biggest provider and you can choose which index and which country you want to follow. However, if you're looking at more sector specific and you want a bit more hands-on and you want to choose exactly which fund manager that you're going to invest in and how much you're going to invest into each individual fund, then going the likes of Hargreaves Lansdown or Trading 212 will provide you with the greatest choice. For beginners, it's best to start at the automated end. As you get more and more confident and want to find out more and more about the investment market, you can move to the more DIY end of the spectrum. You might be saying, yes, but Anthony, my bank provides me the opportunity to invest the money with them and I can buy stocks and shares through them. You can. However, the providers that I've mentioned are specialists in their area. They charge low fees, so they won't eat into your investment gains. Starting with an automated or robo-advisor means that you're not paying for a whole team of analysts and individuals to come up with stock recommendations, so you can invest your money for incredibly low fees. So there you go. Are you a DIYer or are you happy for someone else to do the work? There's no issue in doing either of those. When people get into investing, they often think they have to be right hands-on and understand exactly what's going into the market and watch the market every day. And that's just not sustainable for people to do every day. There's people who get paid to do that every single day, like me. So you don't have to. Just remember that time in the market is so much more important than timing the market. And for beginners, it's so important just to be investing into the financial markets. That's why I always recommend start automating your investing as soon as possible. Pay your money in monthly into a provider that will invest your money for you at low cost so that you can just gain exposure to the market. It really gets you into the habit of investing and to understand the investment markets just that little bit better. If I have any friends and family asking for recommendations about where they should start investing, I always say start at the automated end of the spectrum. This is so that they can just get used to investing. So much more hassle-free and they don't have to worry about watching the market every single day. And as you build up with more money and more time in the market and you become more comfortable with investing, you can start moving from the automated end of the spectrum right the way up to the DIY end of the spectrum, where you can be reading balance sheets, researching individual stocks and buying shares in each company that you might like or use every single day. Well, I hope you've enjoyed today's video and I hope you've been able to understand exactly where you sit on the spectrum. If you have enjoyed today's video, please make sure that you hit that like button and hit that subscribe button so you don't miss out on any further videos. And I'll see you next time.